Okay, so um, here we are today, guys. I have the CEO of Terra, Joe Cohen, with me. We received an overwhelming response from all the community members. I believe there were like more than 50 questions. Obviously, we couldn't take all of them, but we are hoping that we will be able to answer at least most of them out here. I hope everybody is able to see us. We'll just wait for people to gather here.
Introduction?
Yeah,
Okay, yeah, sorry. Just got a little confused. Hi, everyone. My name is Joe. I am a co-founder and CEO of Terra Money. We work on several different things. The primary focus of the firm is to think of ways to make our stable coins easier to spend and more attractive to hold. And to that interest, we run a number of payment companies, including China Imports in Korea, MimiPay in Mongolia. And then with respect to synthetics, we have the newly launched Mirror Protocol, where Terra stablecoins become a gateway to access lots of different types of asset classes without restrictions. The last is we have a savings protocol called Anchor that's should be launching shortly, where we leverage exogenous inflation to the system to power attractive and stable yields on stablecoins. Hey, Ayush, I think you're mute.
yeah, I'm sorry about that. So, we had a lot of questions from the community. Let's start with the first one. As you can see on the screen, people are saying, really congratulations on the recent SoftBank Chai funding, definitely a big deal. But can you explain in more details how this would translate into value capture for Luna?
Yeah, so it's pretty simple, actually. So, usually with fundraisers like this, it's making investments to make sure that transaction volume and usership can go up over time. And then every time that a Terra stablecoin is transacted using Chai, it pays a transaction fee to people that stake Luna. So in some sense, like the more that Chai is able to grow as a result of this investment, the more cash flows that Luna staking would receive. So I think it's a net positive.
All right. So I think the second question also is somewhat on the similar lines. So let's see. Can you clearly demarcate which portion of revenue or fees earned by Chai accrues value to Chai equity holders and which portion accrues value to Luna holders? That's the second question, though.
Sure. So a large portion of Chai's value proposition is that it doesn't really extract rent from payment transactions. So the idea is to sort of get rid of middlemen and waste from processing transactions. And the bet that Chai is making as a payment company is that if you're able to reduce a lot of the fat, so instead of sort of extracting rent from transactions, once you have that sort of captive user base and different types of things, in that case, you can monetize that user base by, let's say, recommending different types of products or deals. So it just basically becomes like a discovery funnel that's similar to you would find in Ebates or Honey in the US. So rent extraction is a little bit different. So if you look at sort of like the net costs in the system, right now the on-chain tax rate for Terra is around 0.6%. And then given that on-chain transaction happens on both the top-up side and then the paying the merchant side, it happens twice. So on net, for an average transaction, Luna holders make around 1.2% on each Chai payment transaction. And then, so Chai charges like a fee of somewhere between 1.3 to 1.5% to merchants. So netting, on-chain fee costs and some administrative costs, processing transactions in and of itself is not that profitable for the company. You're still muted.
Yeah. All right. Yeah. That's pretty clear. So actually, another question that we had from one of our community members was around the integration of Samsung Pay with Chai lately. They were asking if you can explain more about what implication would this integration of Samsung Pay have on Luna, and how does it accrue value for Luna?
Sure. So, given that Samsung is a Korean company, Samsung Pay is highly ubiquitous in Korea. So every merchant accepts Samsung Pay. So most Koreans, I think above, uh, you know, upper 70% or 80% have Galaxy phones. So basically, like it's the most convenient way to pay for things in the country. Most online digital merchants accept it. Every single offline vendor accepts it as well. So the primary benefit of having the Chai card be compatible with Samsung Pay is that we've basically burst through the long tail of uh, having this payment method be used in every single merchant in the country. So it's literally capturing millions and millions of accessible merchants uh, with one integration. So that's super meaningful.
Yeah, I guess Samsung Pay integration is very meaningful, and that's pretty well explained. Moving on to some other questions on Chai, we got a lot of questions from the community members. So the next one that comes on board is, do you have any plans on expanding the Chai app into other countries like US, Taiwan, Australia? Which countries are at the top of the list for Terra payment business expansion?
Yeah, so that's a really good question. So I guess sort of geographic differences for every industry exists, but I would say that for payments is very pronounced. So, for example, like the payments market in Europe would be nothing. It wouldn't even be remotely similar to, let's say, the payment market in APAC, right? So, I for us, like the high area of focus would be, for the Chai brand itself, right? Focus on payment expansions into, let's say, um, Japan, Thailand, Taiwan. So most of the countries in the East Asia to Southeast Asia region where payments are underserved would be our primary area of focus. As for Terra itself, though, I think we have ambitions of having our stablecoins be used in lots of different places outside of China. And then, so especially with a lot of fintech companies like Revolut, PayPal, Venmo entering the payment space, it's become evident that like the hurdle of having a large fintech player adopt cryptocurrencies for use in various different types of things is much lower. The hurdle is much lower than it used to be. So we plan to make sure that our stablecoins are widely integrated by offering unique value propositions that speak the language of payment companies in a way that most other cryptocurrencies cannot.
Right. So what I infer from this, Joe, is that we will be primarily focused on the Southeast Asia more than the other regions.
Right.
Okay. All right. All right. We had a question regarding Mirror. So the question being asked is, Mirror will offer the option to buy M assets with BTC. I assume this will be via REN VM. Will users of Mirror interact with REN BTC, or REN BTC will be under the hood such that they deal in real BTC?
I assume that this is referring to the ability to purchase these assets using Mirror Wallet, not the Mirror protocol itself.
Yeah.
So I am limited in my authority to speak in terms of how the integration would look like, given ATQ Capital is in charge of the project. But what I would say is it's probably going to be some sort of mechanism where BTC itself can be deposited and there's some sort of clearing mechanism to transfer that value into UST.
Yeah, so it all basically comes to UST after a point in time.
Right.
Right.
Yeah.
Right. Fair enough. Okay, so we'll move on to the next question. Though there were questions around transparency, so one of the community members wrote that though recently some 15 million, 30 million coins were allocated for team payouts to cover costs, uh, could you please help us verify if these tokens are sold by the team? Would really appreciate if you can give us more clarity on how will the foundation tokens be used, and maybe get more transparency on these kind of unlocks.
Yeah, so that's a good question. So in terms of whether, so Ayush, you probably know, but we have many, many different people that work at Terra. So I don't think I can, or it is appropriate for me to track how many of these tokens are sold by team members, because they earn these tokens, right? They work hard for what they do. You know, I can only speak to what I do, and I don't really sell Luna, so that puts context. But I don't think it would be appropriate for me to say, oh yeah, this guy sold Luna and this guy didn't sell Luna. I don't keep track of that. It's not really a good use of my time, nor do I think it's going to be fair or appropriate for the people that work with us.
Right. Yeah. So that's today's headline, that Doe isn't selling his Luna anytime soon.
Yeah.
Okay.
I did buy some mirror though at $1.70. So that's it. I think it's still down, but it'll be fine.
All right. But
Yeah.
the second part of question basically again here is that will community be provided more communication around how the foundation tokens will be allocated in terms of team payments and all those sort of things? Is there something that we can communicate to them on that front?
Yeah. So I think some of the things that we could be doing better is. I think in terms of team tokens, it wouldn't be appropriate for us to declare which developer or which person gets how many, because in that case, like, it's generally not good HR practice to declare what everybody gets on how much, because everybody has a different estimation of how much value or how many things that they're doing to the company. And then it also ties into things like when people joined. So for some of the people, they joined before Luna had any value, right? So there's some interesting dynamics there where I think for individual payouts, it would be not appropriate for us to share everything, but in terms of the total amount that we unlock on a monthly basis, I think that's something that we could share. Another portion is, I think, just in general, one of the big problems or interesting things about Terra is that we have lots of different assets, right? So we have a number of different stablecoins. We have Luna, and then there's a swap mechanism to be able to, change each of those assets for another. We have a number of different applications. We have Mirror, we have Terra on Ethereum, Chai, and lots of different systems. So I think it's critical to have some sort of analytics dashboard to understand how the funds are moving from each of these systems, and then understand the dynamics of, for example, if like more Luna is being printed or Luna is being burned quickly, what does that mean for the ecosystem? So, having some sort of like a dashboard or like insight into how our assets are moving is one of the things that I've been thinking deeply about.
Yeah, that's absolutely right. I totally agree with that. And in fact, though, our next question was in line with something around the theme that you just mentioned. Because people right now are pretty confused. They say that, we see there's an issuance of 150 million in Terra USD, but we see that only a total of 5 million Luna has been burned. Is there a timeline as to when we can expect 1:1 Luna burning in action for every new 1 USD being issued?
Yeah, so the reason why there hasn't been a lot of Luna burned to mint Terra UST is that people only burn Luna, and then that includes Terraform Labs, to mint Terra when the costs are not prohibitively high. So the thing is, the major problem with burning Luna to mint Terra when there's high demand in one direction of that trade today is because the slippage costs to swap Luna to Terra and then Terra to Luna is much, much higher than what's required to facilitate, new applications that are coming out like Mirror and different things like that. So as of today, with Terra and Ethereum combined, there's more than $120 million worth of, UST and various M assets, which is a derivative of MST, of UST, if you think about it, locked up in total value locked in each of these systems. So, and all of that value was created in the course of 2 weeks. I think it's 2 weeks. Okay, yeah, so what that means is that the Terra swap mechanism isn't yet liquid enough to generate that much value while being cost efficient for the parties that are doing it. So one of the things that we've started to do regularly over the last 8 months or so is to introduce governance proposals to keep increasing the size of the swap pool, which allows the slippage costs between Luna and Terra to Luna swaps to go down significantly over time. So I think it is improving, but we still have some room to go. Yeah.
And does UST liquidity with USDT has something to do with it? Do we think that if UST liquidity itself improves in the market, like we already are in the top 8 in terms of volumes on Uniswap now, does that happen to favor this transition that you were talking about?
Yeah, although I think this is a little bit different because even if even if like liquidity for UST and the Terra USD with USDT were to improve, you still need people that are willing to mint assets like UST whenever there's some perceived demand in the market. So for example, let's say that like a market maker, is taking on the cost of providing our stablecoins on par against USDT in secondary markets like centralized exchanges like Uniswap, like Curve. But at the same time, in order to make sure that they have inventory of Terra USD, whenever they need more, they need to be able to mint it, right? If they're the primary source of liquidity on the secondary markets, then the only way that they can create stablecoins with is by burning Luna. And if the cost for that is expensive, then those slippage costs have to be sort of propagated to the end users that are purchasing our stablecoins.
Right. So I believe the secret ingredient here is the Luna liquidity, not really the UST liquidity, right?
Right. So it's a function of two things. Number one, Luna liquidity needs to improve because the arbing mechanism requires people to take on beta risk in Luna. So if Luna liquidity goes up, then in that case, slippage costs go down. Another function is to make sure our base pool size in our swap mechanism keeps going up over time. So the way that we can do this is to be proactive in governance, have healthy discussions around how to trade off Luna liquidity and stablecoin liquidity, and then as a community to sort of coalesce to increase that parameter consistently over the course of, let's say, 4 to 6 quarters.
Yeah, that's very clear, though. Thanks so much for answering this. The next question that we have is around Mirror. So people are concerned about regulatory challenges. So the question is, Mirror strikes me as an experiment with massive prospects, but also significant regulatory challenges if it gains traction. Are there any plans to mitigate regulatory interference?
Yeah, so this is a really good question. Of course, a lot of the things that we do as a firm is based on legal counsel that we get from lots of different advisors, which I don't think would be appropriate to share that particular detail at this time. But the way that I like to think about it is that all that we've done as a company is to write code to bring an awesome product into the market. So there's nothing about the Mirror protocol itself that benefits the firm in any way whatsoever. So we've sunk significant resources to make sure that this thing can get built out, but we charge no rent or no fees, from like the Mirror system being traded. We gave the governance tokens away for free to people that stake Luna, people that held Uni as of like the snapshot date, and even the tokens that I received as a result of my Luna staking, I'm giving that away at the end of this year. So we were actually pretty thorough in making sure that we take no financial upside from this, except to build something really, really cool and amazing, and to decentralize and give up control of the protocol from day zero. So the thing about it is, if you give away something to the people that use it, so if you have no ownership in the system, right, then all you've done is write code, and then that's just exercising your freedom of speech, right? You really can't be regulated for things that you don't control.
Right. That's very interesting that when you said that you will be giving up your any financial incentive whatsoever that you might have got, from Mirror. So yeah, that sounds like a plan. Uh, Another question on Mirror from the community: are there plans to bring USDC on Mirror and Anchor? All new projects like Matic, XDAI are prioritizing USDC more than USDT, as it is the most reliable stablecoin today.
Yeah, so I think a lot of dApps have a preference for USDC. That's because a lot of the dApp development is coming from stateside, where USDC has interesting liquidity and also has more branding. But I think for Mirror, it's not really a function of not wanting to include USDC, but I think USDT is more important, because Tether liquidity outside of the US is much, much superior than USDC. All the major exchanges support it. A lot more people outside of the US have accessibility to it. So if Mirror's goal is to be if Mirror's vision is to allow people to get asset price exposure to any sort of asset class, then we can't sort of price people out, if you will, by not providing them the asset that they have the most accessibility to. Yeah, but yeah, we can add USDC. I'm just saying that it's probably a good idea to keep USDT too.
Right. So we can add USDC. I see. The next question is around Anchor, and this has been asked a lot. The release of Anchor was earlier scheduled for November. When can we expect this release officially now? Is there any ETA that you can provide us?
Yeah, also, the major reason for shipping Mirror ahead of Anchor was because around the macro climate in which we were sort of bringing Anchor to maturity, so this would be, let's say, August, September of this year, that's when a lot of the yield farming craze started to pop up in DeFi. And then you started to see, say, like 5,000% yields on stablecoins. So it just wasn't like a good macro climate to launch a stable, attractive savings protocol at 10% APR, because people were like, oh yeah, but we're getting 5,000% now, without realizing the underlying risks attached to that 5,000% risk. So it was just, we felt that at that given climate, it would be more exciting to prioritize Mirror and launch that. And then, we thought it was going to cool down. Like, there's no way that you can have 5,000% risk-free yield, right? So we decided to follow Mirror up with Anchor. So, but I think doing that. So it's not so much that we've serialized these things. There's different parts of the team, as you know, Ayush, that work on Mirror, different parts of the team that work on Anchor. So I think taking that additional time has allowed our infrastructure to mature significantly, and has allowed us to build a lot more interesting things. So yeah, Anchor is just about ready. So we're lining it up to get an audit, and then after that, we should be launching it with a very exciting launch partner very shortly.
But no specific ETA around when we can expect Anchor to launch? January, February?
Yeah, so the way that the Anchor team is looking at it, so a lot of it has a dependency on the audit. So Mirror itself actually had an original ship date of early October, but it got delayed by 2 months. And the reason for that is right now, with a lot of DeFi hacks that are going on, it's hard to procure an audit or a set of audits to make sure that the system doesn't break. given there's a large backlog of different projects and then just a few quality auditors. So yeah, we're looking at mid-January timeline, but that could get delayed as a function of us not having the proper clearance from audit agencies.
Yeah, I kind of agree because audits and are extremely important these days. Just because you want to ship something early, you end up missing something. That will be a huge error, I believe.
Yeah, yeah. Oh, we could also take like a small break and then respond to some of the questions in the comments. What do you think?
Yeah, I guess so. We can do that. Let's see if we have something out there. Just a second. So yeah. Okay, so I see a few questions out here. So the one question that I see is, what is the end goal with Mirror? Are there plans to expand into new markets? Are there plans to also expand M assets to non-US stock markets?
Yeah, so as a function of not having like literally any control, the only Mirror tokens I'll have are the ones that I bought. So and that's like not that much. So so it's not really all up to me. But if I had my way, the way that I look at it is that I want Mirror to literally mirror every single asset on chain. So the big problem with the blockchain ecosystem today is that all of the value that is being created is endogenous. So basically, it doesn't really map to real world utility as a function of being censorship resistant. But the thing is, like, yes, you can create assets that have native digital value, but definitely not like 50,000 assets, right? So you still need to have assets that can be redeemable for different types of value. So, for example, rights to govern a company, right? Or let's say, real estate, precious metals and different things like that. And then I think this is one of the first serious attempts to sort of map all the value that exists in the real world and create a synthetic version of that on chain. So I think that's really exciting. If you look at some of the other synthetic protocols, it's interesting, right? But it mainly stays within crypto itself. So, for example, like inverse tokens of various cryptocurrencies, or like you might have some fixed income instruments, but you already have lots of different alternatives that do that natively on the blockchain like Anchor. So yeah, so the goal is to replicate the entire financial stack, think about ways in which blockchain can solve those problems better, and then use mirrored assets as primitives to be able to create lots of those different financial markets. And we think that's going to be a huge game changer.
Right, and I think we are progressing on that front, though. I believe you said that we are going to have a more robust governance mechanism so that people can add more M assets.
Yeah. There's going to be a couple of things. So next week we'll be publishing a guide that makes it really simple for people to understand how to add support for an asset. So we started out with 12 because we didn't want to sort of fragment user attention too much. But there's going to be schemes where, like I expect hundreds of different M assets to be added over the course of the next year, and then lots of different, services, protocols, and other different things get built on top of M assets in a way that I think is really, really interesting.
Right. Yeah, that's pretty interesting. In fact, though, I would like to take one question from the community, which was in line of what you were just saying. People wanted to know the roadmap and what exactly are we looking for in future.
Oh, I think there's a.
Yep.
Yeah, I think there's a good question from Seb Nonzi.
Yeah. Here it is, though. Yeah. Yes. Let's take it.
Okay, the way that I understand Mirror scale is a lot more M assets need to be minted in order to increase pools liquidity. Okay, so this is a great question. So one of the reasons why it's hard to mint M assets today is because essentially you're being forced to take a short position on some of the most attractive assets in the world. And it's not a good idea to short Apple in a lot of different cases, or nor to short Microsoft. But yeah, so this is a really good point. And when we were sort of designing the incentive mechanisms for yield farming around Mirror, we thought long and hard about whether we wanted to incentivize liquidity or we wanted to incentivize minting of M assets. Where we decided was to direct most of the initial incentives towards liquidity, because if you have liquidity mining, then you have weird arbitrage incentives for people to mint M assets. And the reason for that is because if M assets are used as one of the pairs to be able to farm Mirror tokens, then there's going to be there's going to be excess demand for M assets versus the underlying. So generally, the trend line that we've seen is that M assets are trading at a premium to the underlying price. So if that exists, especially during off-market hours where positions can't be opened or closed, then it just becomes a really good idea to be able to mint these M assets and to sell it at a premium and then wait for prices to normalize to close out your CDP. So there is some sort of, shall we say, organic demand to mint M assets as a function of that. But we recognize that there needs to be a longer term solution to make sure that people stay incentivized for the longer term. And that's where the community fund comes in. So a significant portion of Mirror supply is locked up in something called a community fund, which is governed by the governance contract of the Mirror protocol. So by making a community fund spend proposal, like the Mirror holders can decide whether to allocate new liquidity, new incentives to different types of things. And I think one of the really good ideas to create a new incentive on is to reward people that create CDPs.
Yeah, right. So basically more incentives for people who are going to mint from community funds.
Right.
And other question also, I think, though, from the live chat is around Mirror versus the competitors. So as you can read, people want to know the difference between Mirror and Synthetix, and what are the advantages of Mirror compared to Synthetix?
Yeah. So there's a few differences. So number one is sort of like the system or the capital efficiency. So if you look at Synthetix, like all the collateralization is done in a native token called SNX. And given that token is highly volatile, so right now it's sort of like the DeFi bull market, it's not a problem. But when if we have like an early 2018 style bear market, then it's not impossible to foresee a scenario where it collapses like 80-90% of value overnight, right? So that becomes highly problematic for situations. So it's already capital inefficient, but even with that, you still have problems of that spirals and collapse in a way that's really hard to predict. So I would say that, basically, like, it boils down to this, like, if somebody is not a believer in SNX, the asset, right? Why would they lock up? Why would they pay a capital cost of 600% over collateralization in order to be into Synthetix? So, like, the way that I claim it is that unless the person is an SNX holder, that is never going to happen. At least I think the realm of sort of sane financial thinking, I would consider that pretty close to suicide. The second is, like, the asset class that Synthetix covers is a little bit different. So they generally tend to focus on creating different types of derivatives on top of crypto. There is a couple of ETFs, like, for example, S&P 500 or Nikkei, but it doesn't really touch, real world assets generally. So I think the focus of the projects is a little bit different. The last is, like, the winning incentives are a little bit different. So for Mirror, if you trade equities well, or if you trade the Synthetix well, and then the price of these Synthetix tend to go up over time, then you just earn whatever the price increase in terms of your Synthetix was. So you're essentially just buying price exposure. But for Synthetix, it's a little bit different because you're not competing against the objective price appreciation or price fall in the prices of the underlying. You have to trade better than the global pool of people that are trading different types of Synthetix in the system. So you could be up 30%, but if everybody else is up 50%, you still lose 20%. So in that sense, like, you sort of create incentives for the community to compete against each other And that's an adversarial system, which is a little bit different from the one that is designed by Mirror.
Yeah, pretty clear. So, on that extension, do we plan to bring MIR, accept MIR as the collateral in future, like Synthetix does?
Well, if a governance proposal passes to that effect, then I think it would happen. But I don't think that would be a great idea, especially because how volatile MIR is expected to be. Right.
Got it. We have a lot more questions coming up on the live chat, though. If you can answer, D. Cornish is asking, can you please explain Terra and Velo partnership?
Yeah, so this is actually pretty exciting. I do think it's going to take some time to build out. The Velo team is very ambitious in terms of what they want to accomplish. So basically, the easy way to think about this is they're trying to build a liquidity network for of transmitting value cross-border for lots of different institutions. So it's essentially it's similar in concept to what Ripple claims that they're doing, except it's not constrained to financial institutions, but it's really about all commerce. So basically, how another way to think about it is that it would be sort of similar to Curve or shall we say Shapeshift for institutions. So basically, the idea is that when a person wants to transmit value from Korea to, let's say, Thailand or Russia, for instance, this person can transmit KRT, right? And then in the clearinghouse, they would sort of OTC and clear that value over their systems. And then in Russia, somebody might be able to receive Bitcoin or, let's say, a Russia credit system, or like a stablecoin, if you will. Yeah.
Okay, so an extension of this question, when are we expecting the launch of this platform?
Oh, we don't have a ship date for this. I think it's going to be like sort of like an ongoing discussion. It's kind of a tarnished fan, but similar to the Libra Association, where we try to figure out ways in order to build out this liquidity credit network over the course of time. But it's not something that's going to happen like in the next 3 months.
All right.
That's what that means. Yeah.
All right. Another timeline question, though. People are very excited about the future, I guess. So, timeline for the next chain Mirror will be launching on?
Next week.
Okay. Yeah, that's great to hear. So, here we have something, coming up very soon. So, that's really nice to hear. Though I'll go back to the questions that people had asked earlier, or that I captured from the community forums. Okay, so this question keeps coming up a lot. Are there plans to list Luna on Uniswap and other DEXs? Because there is no easy avenue for US-based people to buy Luna easily at the moment.
Oh, I think that's also next week. We're adding a Luna pair. Yeah.
So I think we have two big items which you have just told us, Joe, in last 2-3 minutes. So I hope people are catching up. And okay, another one.
Ayush, 1 second. So as for the next chain that Mirror is going to be on, it just happened as a casual discussion in the Mirror Protocol Telegram room. So like most of you chose Binance Smart Chain. Yeah. So we're just going to be doing that next week because it just turned out to be really popular.
Yeah, that will be exciting. So I think this is official now then, that we'll be integrating with Binance Chain probably by end of next week. That's great to hear. And obviously, like you said, Luna Uniswap listing also is coming by end of next week. So, okay. Right. Next question though, is there a potential for Chai app to integrate with Mirror in the near future?
Well, no, because if we did this, it would defeat the entire purpose of us not having, too much centralized control over the system. But if like the most popular venue is a fintech company that we control, then we no longer have that veil of developer innocence, if you will.
Right. Yeah. I guess that will be a little bit of a far-fetched future, hopefully. Okay. Another question. Are we going to have an option in Chai for users to buy Luna? This will be a great exposure to the crypto asset since you already have a large user base.
Yeah, so in order for Chai to be able to do this, it's going to have to wait for, let's say, so like it's actually becoming super popular for a lot of different fintech apps and payment services to offer the ability for people to purchase Bitcoin and Ethereum and different types of cryptocurrencies. It became cool as soon as PayPal did it. So like basically everybody is looking into this right now. But for us, I think we would be interested in doing something similar to that, but we would have to wait till next September to be able to do this. And the reason is because VASP regulations in Korea kick in around that time. So that's a virtual asset service provider. So in order to be able to sell cryptocurrencies for speculative purposes, we would need those regulations to kick into place.
Okay. Though there are questions that we are receiving on new chains that Mirror is targeting. Obviously, you said Binance chain is probably launching next week. But how about other chains for Mirror assets?
Yeah. So Terra intends to be hooked up into a lot of different bridges, right? So for Binance Smart Chain, we're just going to be hooking it up into Shuttle, right? Wormhole, which is a bridge built by Certus One and Solana, so that should launch fairly soon. I think I want to say January next year.
Okay.
In that case, you will be able to see mirrored assets on Zero on Solana.
Great.
So it's not really a function of like adding new support for chains on Mirror. It's just having more bridges support Terra. So if more bridges support Terra, then our assets can migrate to different chains, right? So
yeah. So though actually on that front, I remember there was a article published by ICX that they are also starting something called IB8 Orbit ecosystem, and Terra
what's
USD is
ICX?
going. So I meant Icon ICX. The Icon Alliance, they are probably launching something called Orbit, and Terra USD is supposed to be a part of it.
So I think Orbit Chain is a different project from Icon.
Okay.
Yeah. So Orbit Chain is definitely a different project from Icon. It's being operated by one of Upbit's affiliates, and I think ICX is as an asset. It's just supported by the Orbit Chain, and then also Terra assets are also supported by the Orbit Chain. Yeah, so that would likely be one of the bridges as well.
Okay. And though this is my question that the recent launch of IBC, how does that correlate with all our bridges coming up and our integrations coming up with different ecosystems? Is there something for us here?
Yeah. So IBC is really cool. So and we are a big supporter of the Cosmos projects. A lot of the things that we've done have been managed to be accelerated because of the great work that people do at All in Bits and various different places in the Cosmos ecosystem. I think it's less interesting to move M assets over to the Cosmos Hub, however, because it doesn't really have a smart contract execution engine yet, so we wouldn't be able to do anything with the mirrored assets once it migrates over. What could be interesting is if we hooked up to, let's say, Thorchain. In that case, that's sort of becoming like a liquidity hub for lots of different cross-chain swaps, right? So in that case, if you have M assets tradable against BTC, against Ethereum, and various different types of things, and that's an eminently interesting use case for IBC out of the gate.
Great. Thanks for answering that, though. I'll go back to one question that we got again from D Cornish. Is SCA e-commerce alliance still in progress with Chai?
Yeah, and I think a lot of the people that signed those MOUs with us are, directionally super helpful, and a lot of the founders of those companies are Luna holders, so they're extremely supportive. But from the track record of Chai integrations, like we probably had around 6-7 merchants that agreed to be in the alliance, but today we have like dozens and dozens and dozens of merchants, right? So it's like it's helpful to be a part of the alliance, but we work with anyone, so it's yeah.
Great. Those new merchant integrations are happening, and obviously Chai Card was recently rolled out. Do we see a grow up in momentum now that Samsung Pay is integrated and Chai Cards has come up, and like you said, we are adding merchants very fast.
Yeah, let's see what's the transaction volume today. Sorry, just loading the dashboard. Yeah, so like the interesting trend line is that now Chai Card is almost consistently the #1 merchant. It beats out Timon, Yanorja, We Make Price, Nexon, CU. So it's becoming sort of like a volume leader in sort of like our product offerings. And I think largely the reason for that is because like the attractiveness of Boost as a product. So people like sort of like the gamified discounts and promotions that they get through Boost. So whereas like the long tail merchant acquisition is something that we're working on, and like every week we integrate with new merchants. It's just that now we've started to enter into the long tail category of merchant integration. So whereas before we were hitting up people that were doing $5-8 billion a year in GMV, we are no longer doing that because there aren't too many of those left. Right, so it's maybe merchants that do 300 million, 500 million, maybe 60 million here and there. And then like the large focus is around like growing the adoption of the Chai Card, and it's doing well.
Okay, good to hear that though. We had questions on BuzzLink also from the community. Like I think one question was, as you can see on the screen, it's about if the transactions on BuzzLink are subjected to tax rate similar to transactions on Chai app, and what's the plan for BuzzLink in future? How is it going to help in growing the Chai ecosystem?
Yeah. So the answer to the first question is yes, it's subject to the same tax rates. So as more people engage in the referrals on BuzzLink, it's going to lead to linear appreciation and cash flows for Luna. So that's positive. In terms of the future plans for BuzzLink, like it's kind of like an offshoot project for us because for everything else that we work on, it's strongly focused on how to make it's around like adding utility to our stablecoins directly. So if you look at Chai, if you look at the different payment ideas that we work on, we focus on making these stablecoins easy to spend. And then for Anchor, it's essentially a way to enable yield on our stablecoins, right? To make it more attractive to hold. And then Mirror, it's a way for our stablecoins to be used as a gateway to be able to purchase any different types of asset classes. So all of these are features around the main product, which is a stablecoin. BuzzLink is a little bit different because it does add features around USD and KRT in the sense that it becomes like a conduit for merchants to pay for different types of referral campaigns and for people to be rewarded in the same. But that's sort of like not the core value proposition, right? So you could replace this with any other stablecoin and it will work the same way. What's kind of interesting though is that I think BuzzLink tapped really well into like a business model that is very strongly that is made much stronger by using blockchain technology. So referral marketing is like a huge industry, like probably $20-30 billion globally, right? But at the same time, there's still massive room for growth because the total addressable market is essentially all of digital marketing. Right? Like people always want to move products on the internet. It just becomes way easier to do so when you have a way to tap into the virality of social referrals for people to refer products to their network and for those people to refer products to that network and so on and so forth. But up until now, there has never been a way that scales incentives sufficiently to tap into that virality in a sufficiently general way for any type of product line. And then I think that's what makes BuzzLink really exciting. And it's something that we are uniquely positioned to do well because we understand moving product across the internet, we understand e-commerce, we understand payments really well. So just in terms of like cross-selling BuzzLink, to our existing merchant and user networks, I think it's going to be like a really easy way to bootstrap growth there.
Yeah, thanks for the elaborate answer, though. Buzzlink obviously is interesting, and I think we are launching in February, if I'm not wrong, on the main product, right?
Yes.
Another question, I think it falls back to the question that you answered last time, Joe, which was basically when the Chai card fully launches, will we have Chai users be able to use BC Card's network of 3 million merchants?
Yeah, of course. And we already have access to this. So guys, like the Chai card now is fully functional. It's just that we're just doing this thing where by creating a wait list, we create FOMO for people that want the card, right? It's just artificial constraints in supply. We can print as much plastic as we want. And just being honest with you, for people that are in this community, it's not a real, it's not a real constraint, nor is it an actual beta launch. But it's great to hear that there's hundreds of thousands of people that are waiting to get their hands on these things.
So the idea I think community is asking though is that the Chai card adoption is something that we are kind of stopping on our own. Like we can accelerate that as we want to, right? In future.
Right. Yeah.
Okay. So a lot of upside on Chai card, it seems. Another question though, which has been coming up, I think, which you have kind of answered, in the last few questions. But let me put that back again. Is about the plans, the future plans for Terraform Labs in 2021. Like longer term, what additional features can we expect to see on Mirror, on Terra blockchain in future?
Yeah. So this is going to be. So there's a list. So I'm just going to go through a few of these things, and then I'm going to stop. Right. So in no particular order, one of the things that I'm like super interested in creating in 2021 is sort of, let's say, a dynamic ETF on top of Mirror. And the reason why this is interesting is that if you look at traditional ETFs, because they're sort of constrained by non-blockchain, non-algorithmic technology, it generally only weights ETFs by market cap. So and then it generally rebalances every quarter. So that's a highly inefficient system when prices are moving as much as it is today. So that's not great. And also, like, you should be able to curate your own ETFs, right? So like no millennial wants to buy the S&P 500, right? Because like what is even that, right? Why is it called S&P? Why is that? Be perfectly happy to buy something like, let's say, a kombucha index, right? Because that sounds cool. And millennials like me are stupid, so we really like the kombucha index. So basically, like an interesting idea to create an ETF is something that balances dynamically, and where the rebalancing can happen based on the axis of something other than just market cap. So for example, like this ETF could be sort of a general smart contract framework that allows the creator to specify, rebalancing criteria in sort of like using Turing-complete programming. So for example, they could be able to specify things like trading volume as like one of the major metrics, or like trading indicators themselves, like the RSI indicator, and so on and so forth, to be able to decide how much of the price exposure in one asset should go up in the overall ETF versus another. So that's also super interesting. You can have something that also rebalances every, like 10 minutes or so. Another thing, so this is sort of like an idea that we've been pitched to by some people in the community. It's kind of like a decentralized limited partnership. So, like if you look at a lot of crypto funds, they operate very similar to traditional venture capital. So they, file like an S2 with like the SEC. They form like an entity, sometimes in the US, but most likely they're in like Caymans, like Hong Kong, Singapore, and so on and so forth. So they raise capital in like a traditional LP structure, and then they spend that fund over the course of, let's say, anywhere between 3 to 10 years. And then when there's money, you pay taxes, and then you give money back to other people. But there's no reason why you shouldn't be able to have something that exists on chain in a smart contract. So in which case you would be able to raise money from lots of different investors from across the world. And what you could do is that you could execute a trading strategy or an investment divestment strategy that is predefined algorithmically. And you should be able to change some of these things using, let's say, governance. But in really, this is sort of like a transparent, globally accessible, community governed type of index fund, right? So it's a little bit different from an index fund in the sense that there is some trading or some management of the portfolio in accordance with the predefined algorithm, and it is editable by community governance. But like there's a lot of properties about this that is super exciting in a way that can invite a lot of people to want to participate. And if there was sort of like an algorithmic robo-advisor that allowed me to get access to, let's say, like the top tech stocks, that's something that I would like to do. Or let's say, like discretionary trading in terms of, let's say, DeFi assets. That's something that would be really, really interesting. Yeah. I'm super excited about Anchor. I think it's going to be like one of the most important ideas to be tested in DeFi. I think similar to how the federal funds rates and yield generally sort of animates all aspects of traditional finance, I think like sort of the holy grail for what makes crypto exciting, it's the starting point actually to take it away from sort of degen yield farming and the small industry that we have to sort of bring about mass adoption in a really meaningful way, is to have higher, more attractive yield on dollar stablecoins than it is possible to get from Wells Fargo. I think that's step one. So I think if we can convince retail in a way that there's some developer and user experiences that you need to figure out, like for example, offering a sexy API, on ramps, off ramps, and different things like that. But if you can build a trusted brand of something that is able to give you a fundamentally superior yield on your dollar, then I think it's going to be a huge game changer. I think that's when millions, if not billions, of people start to cross over the chasm from your commercial bank account that tries to rip you off all the time and offers you no interest to something that gives you 10% in a fully algorithmically guaranteed way, and isn't controlled or manipulated by anyone. So I think it's going to be one of the holy grails of crypto. And on top of this, you can start to build really interesting things. Like, for example, layering on Anchor and Mirror, like you can build things like stocks that dividend 10% in perpetuity or something like that. So those are really exciting ideas that Anchor immediately enables.
Yeah, absolutely, Do. I think most of us are really excited about Anchor. It's going to be a product which will be revolutionary in some sense. But though, people also were asking about the partnership with Lido. What exactly are we planning to do with that? If you can give us more color on that, Prat.
Sure. So how Anchor works is that it uses something called liquid staking derivatives as collateral. So what a liquid staking derivative is that usually when you stake an asset, you give up liquidity. So it gets locked up in the system and then you cannot withdraw it or trade it. So the problem with that is that, yeah, staking yields are great, but it also forces you to make a hard choice between the rewards that you can get from the base layer and the opportunity costs that you're suffering in, let's say, the DeFi stack, right? So when those DeFi yields go up, then in that case, you're incentivized to unstake, therefore reducing the security of the network. So it's just not like a fun time for people to have to worry about whether they want to be working with the base layer or the application layer. So what a liquid staking derivative is very similar to a code check. So if you go to a code check, if you give the guy your code, right, then he gives you a small ticket, right, that verifies your ownership of your code, right? So it's pretty much the same way. If you go to a liquid staking derivative contract and you give them your stake, they're going to stake your assets for you, and they give you a sort of like a voucher or let's say a shadow token that says, hey, look, we are holding your tokens, and then they're now staked on the chain, right? And then like Lido, for instance, also has a mechanism whereby the rewards that accrue to those positions are also sort of, tokenized and then conferred to the holder. So you basically have like sort of a situation where you're holding assets and you're also earning a yield on those assets in a way that it's entirely tokenized. So what's going to be really exciting is that if we integrated with Lido's Beth token to the Anchor system, then we would be able to tap into the staking yields for Ethereum to power yields on Anchor stablecoin deposits. So it vastly expands the total addressable market of Anchor when it launches for the first time, because Ethereum staking's total market cap is in excess of, let's say, the next 20 POS chains combined.
Right. Yeah, and Anchor seems to have so much promise, though. If you can let us in on like what with is there any incentive for Luna stakers that you will build in for Anchor? Are there any plans for that?
The token?
Yeah, I mean, yeah, like you know, Luna stakers are eligible for weekly MIR tokens. So, is there something in we can expect for Anchor as well? Like staking Luna will be more beneficial
So
than just holding Luna.
I expect we're going to be launching a lot of different products in Terraform Labs. At the end of the day, that's what I really enjoy doing, and I think we've built a culture where product comes first. So we're going to be building lots of different things, and whatever ownership, stake, or value accrues to each of these products, it's going to go to people that stake Luna. So we tend to think about like Luna as sort of the capital asset that allows you to go long on everything that's happening in the Terra ecosystem. And I don't think we'd be working on anything that doesn't confer value to Luna. That's just not interesting to us. Yeah.
That's great to hear. So, though I'm counting ETFs, I'm counting index funds, I'm counting yield-bearing stocks and fixed income instruments. There's so much happening coming on in 2021. It really excites me. Coming on to the next question, I think we have one more question from the community. Kind of a big question out here from Seb Donzi. Probably you can read that though and answer. Pretty long.
Sure. Are there any plans for getting more clarity on the usage of the STT reserves to understand what the reserves are meant to? Yeah, so this is a really good question. So to answer the last question first, if the STT reserves are used in a way to mint stablecoins, then it doesn't lead to a corresponding burn of Luna. So that is a net cost to the system for sure. So whenever reserves are used, then in that case, it leads to less Luna burn. So from that sense, yes, it's a net loss. However, I think we've had a lot of productive conversations in the community as to how this enables use cases around their Terra stablecoins that otherwise wouldn't have been able to exist at such an early stage had the SCT reserves not existed, right? So I think the critical question here is whether we want to use this as a way of offsetting a lot of our partners' costs in terms of making sure that our stablecoins can be useful at production scale in a way that the swap mechanism doesn't allow today, or whether we want to slow things down and just organically let things take its course. So, for example, like I think for payments businesses, liquidity needs to be a lot better than it is today because it's a marginal business, right? So if they're losing, even 10, 20 BP on a payment transaction, then that's basically life or death. Right. So like if you look at a payments business, it's a highly optimized marginal business. And given that they generally do volumes in the billions and billions of dollars, like even small blips on either side can have huge implications. I think for different things like, let's say like Mirror, for instance, I think there's going to be more tolerance for slippage, because like you're essentially enabling access to like asset classes that you otherwise couldn't have gotten before. Or like you also introduce edge cases where like if you trade using these tokens, which is essentially CFDs, like it leads to different tax implications. So I mean, in some sense, like I think people are willing to pay that premium or discount in several different cases. But and yeah, and so like you would see that in a lot of cases around Mirror, like the assets trade on premium or like at a discount a lot more often and a lot more heavy spread than you would see around the payment use cases, which is KRT. At what points do you think liquidity for swaps will be high enough that reserves are not needed and can be burned? Well, so the easy way to look at this is that on like a good day for Chai, when it needs to settle lots of money, right? Sometimes there might be, you know, $4 million worth of stablecoins entering the market. So basically, on that, like the way that liquidity needs to improve is that while divesting those $4 million, there needs to be very little slippage, right? So which means that Luna liquidity would likely have to improve 10x from where it is today, in order for us to be able to significantly increase the size of the base pools to be able to accommodate this. And you know, at the trajectory at which we're going, I think like, you know, 10x is not far-fetched. So in fact, like Luna is not a highly traded asset. So I think a 10x from here would just make us sort of middle of the pile, if you will. So yeah.
Right. I think we got a new question. Probably we can take that though. Pretty long one again. Stability reserves account for 20% or 200 million Luna. Terra founder shows that TFL has 200 million SDT received and 800 million more to be received in next few years. Why is the Luna total supply not reduced? I think we kind of answered it before, but though if you want to take that.
Yeah, sure. So the reserves are the reserves are not used, are not created by burning Luna. The reserves are just there, right? So it was, you know, included in sort of like the genesis supply of all the different assets. So like 100 M SDT printed over every year for 10 years, and it's not a function of Luna being burned. So I think there might be some confusion there in terms of how the reserves were able to be originated. Well, oh, okay. So the 20% stability reserves are a different type of reserve. So the SDT reserves are the stablecoin reserves. The 20% Luna reserves were created to prevent situations where, and this is like a really optimistic scenario, but we imagine scenarios where if Luna was spiking too heavily to the upside, right, then in that case, in order to enable businesses to function normally, then in that case, the stability reserves would guarantee that normal business operations could continue by sort of constraining upwards volatility too much, if that makes sense. So in some sense, like the SDT reserves help to offset the costs of swapping. The Luna stability reserves, were created for a really optimistic scenario of Luna's price performance, where there would be too much short-term swings to the upside, where it would need to be constrained in order to allow normal operations to continue. But that didn't materialize. Yeah.
All right. Yeah. I think we have had a lot of discussion on this in the initial part of the AMA as well. Okay, so people who want to know answers to these questions, they can probably see the live stream later. These questions have been answered. Okay, so I'll move to the few other questions that we got.
I kind of have to bounce.
Yeah.
The doctor's
Yeah. Sure.
Yeah.
Okay.
So as a closing thought, this is the first time that we did like a video community AMA. I'm pretty accessible on all of our channels. Please feel free to reach out to me on Twitter, Discord, Telegram. I'm in these things at least every couple days or so. So just please reach out, and almost every day is an AMA. So it's great speaking to everyone in the community, and it's been a lot of fun.
Yeah, though, thank you so much for taking the time. I think we had a very long AMA, and you answered all the questions very clearly. And thank you for some new announcements that you gave us today. Really excited and hoping to get in touch with you again on future AMAs.
Yeah, sounds good. All right, thanks so much.
Yeah, thank you. Thank you, though.
Bye-bye.
Bye-bye.